Hey everyone, and welcome back to Talk Tickers. We're going to take a deep dive into Cedar Fair's latest earnings call.
Right?
They just released their Q4 2024 numbers.
Oh, yeah. Lots to dig into here.
Definitely a lot to unpack. It's been a wild ride for Cedar Fair this past year, especially with that huge Six Flags merger. Everyone's really curious to see how that's all shaken out.
For sure. And I think the stock's performance after the release is definitely interesting to watch.
Yeah, it closed up on the day of the call.
Yeah.
Which kind of hints at some positive news.
Yeah.
But we want to go beyond just like the surface level stuff.
Absolutely.
So let's jump into those details.
Ah.
First off, Cedar Fair had a huge October, like absolutely smashed their previous records.
That seems to be the trend right now. And a lot of that, I think, can be attributed to the Halloween events, you know?
Yeah.
Those fright fests they're holding across their parks are just so popular.
Yeah, people love spooky season, and it's just like a cash cow for them.
It really is.
Yeah, it makes total sense. But it wasn't just a one-off success for Cedar Fair. They've had a really strong start to 2025.
Yeah.
Attendance is up 2% compared to last year.
Wow.
And season pass sales have jumped 3% just in the first 2 months of the year.
That's a great sign. It just shows that people are still very much interested in these immersive experiences, even with all the talk about a potential economic slowdown.
Yeah, I think people are still ready to get out there and have some fun.
Absolutely.
So now let's talk money. Their adjusted EBITDA came in at a very nice $209 million. Now, for those who aren't super familiar with financial lingo, EBITDA is essentially like a snapshot of a company's operating profitability.
Right. It strips away all the stuff like interest and taxes that can muddy the waters a bit.
Exactly. So it gives us a really clear picture of how the core business is actually performing.
It's a good way to compare performance across different companies and time periods.
Definitely. Now, what's particularly impressive here is that their modified EBITDA margin saw a huge 650 basis point boost,
Huge.
bringing it to 30.4%.
That's a big jump.
So I know basis points can sound like financial jargon, but basically it just means that Cedar Fair is squeezing more profit out of every single dollar they bring in.
Yeah, that's what we like to see, right?
Exactly.
Yeah.
It's a great sign of efficiency, which is super important, especially after a massive merger like this.
You nailed it. And this margin improvement just further reinforces the idea that this Six Flags merger is really starting to pay off. Remember, they were targeting big cost synergies from this deal.
Right. And they're not just talking about it. They actually delivered, they managed to save $50 million in 2024 alone.
That's a lot of cash.
That's huge.
Yeah.
And they're projecting another $70 million in savings this year.
Yeah.
So where are these savings actually coming from?
Well, a big chunk of it comes from streamlining their operations. Think about it. They've got two massive companies now combined, so there's bound to be some overlap. They've been able to trim labor costs, negotiate better deals with suppliers, thanks to their increased size, and eliminate a lot of redundant overhead expenses.
That's just smart business, right? They're making the most of this merger, becoming this like lean, mean entertainment machine.
Yeah.
But here's the thing that I find even more impressive. They're achieving these cost savings while also keeping their guests happy. How often do we see a merger pull that off?
It's really rare. Honestly, usually you get cost savings at the expense of customer satisfaction, or you maintain the customer experience, but you struggle to find those efficiencies.
Right. Like one or the other.
Cedar Fair seems to be hitting that sweet spot, though.
Yeah, they're finding that balance. It's definitely a recipe for success. So they're saving money, they're keeping guests happy. But what are they doing with all this extra cash? Well, they're not sitting on it.
Definitely not. They've got some ambitious growth plans in the works.
They do. Their capital expenditure plan for 2025 is massive. They're planning to invest between $475 million and $500 million in new attractions and park upgrades.
That's a huge statement. It shows they're very confident in the future of the theme park industry.
Yeah, they're not holding back at all. And we're not just talking about like minor upgrades. We're talking thrilling new additions across their parks.
Right.
They're adding a new roller coaster called Siren's Curse at Cedar Point.
Nice.
Another one called Rath of Rakshaasa at Six Flags Great America, and just a whole bunch of other adrenaline-pumping rides.
They know what the people want.
But it's not all but the thrill rides, right?
Right.
They're also investing in family-friendly additions, like water park makeovers, and expanding their Camp Snoopy areas.
It's a smart strategy.
Yeah.
They want to make sure there's something for everyone at their parks, from the thrill seekers to the families with young kids.
Exactly. Diversification is key, right? They want to appeal to as wide an audience as possible.
Yeah, exactly.
And it doesn't stop there. They're also shaking things up with their portfolio. They've launched a program called Project Accelerate,
Okay.
where they're taking a really close look at all their properties and identifying any potential assets they could sell off.
Yeah.
Yeah, they've already seen some strong interest in a land sale they're doing near their park in Richmond, Virginia.
Okay.
So this move shows that they're not afraid to make those tough decisions, streamline their operations, and really focus on their most profitable parks.
That's a good sign for investors. It shows that they're thinking long-term about how to maximize value.
Absolutely. Now, we've covered a lot of ground here, but before we wrap up this part of our deep dive, we got to get to the fun part, our This Is Not Financial Advice segment.
All right, let's get speculative.
Buckle up, everyone.
Yeah.
So remember, this is purely for entertainment purposes.
Of course.
We are not financial advisors, so please don't take any of this as actual investment advice. Do your own research before making any decisions.
Always good advice.
Always. Okay, disclaimer out of the way. Let's get a little crazy. What if Cedar Fair took this whole portfolio optimization thing to the next level and spun off some of their most iconic properties into a separate publicly traded company that's focused purely on those hardcore thrill rides and immersive experiences? Imagine a company called Thrillco, with parks like Cedar Point Knott's Berry Farm and a few others, catering specifically to the adrenaline junkies out there.
Ooh, that's spicy. I like it.
Right?
That could actually work. Think about it. This Thrillco would have instant brand recognition. They could attract a premium valuation in the market, and they could just go all in on those insane rides and events.
Exactly.
Maybe even partner with brands like Red Bull or Monster Energy to take things to another level.
Oh, yeah. Now you're talking.
Yeah.
It would free them from having to balance those family-friendly attractions. And they could just go all in on those record-breaking coasters and exclusive experiences that draw those die-hard thrill seekers.
It would definitely be a riskier play.
Of course.
But with the right execution, it could unlock some serious upside.
Huge upside. So what do you think, listeners? Is this Thrillco spin-off a wild idea with potential, or just a crazy roller coaster to nowhere?
Yeah, let us know.
Let us know your thoughts. We want to hear from you. We'll be back in just a moment with part 2 of our Cedar Fair deep dive, where we'll dig even deeper into the details. Stay tuned.
Welcome back to Talk Tickers. So let's actually dig a little deeper into the financial wizardry behind those impressive cost savings Cedar Fair achieved after merging with Six Flags. Remember, they managed to trim a cool $50 million in expenses in 2024 alone.
Yeah, that's some serious cash. And it's not just about slashing and burning. They've been really strategic about it. Finding areas where they can streamline without impacting the guest experience.
Right.
So, for example, they've been able to optimize their labor costs, which makes sense when you think about it.
Yeah, merging two giant companies like this, you're inevitably going to have redundancies in staffing. Right?
Totally. It's like how many people were doing the same job twice before.
Exactly.
So they've eliminated overlapping roles, streamlined their workforce, and that's contributed significantly to those savings.
Yeah, definitely. But labor is just one piece of the puzzle.
Right. What else is there?
They've also unlocked some major savings in their supply chain. Think about all the stuff these parks need.
Yeah, it's a ton.
Everything from, food and beverages to ride maintenance to construction materials.
It's mind-boggling.
Now they have the combined purchasing power of Cedar Fair and Six Flags, so they can negotiate much better deals with their suppliers.
Yeah, it's like bulk buying on a massive scale.
Exactly. And those savings add up really quickly. Plus, they've consolidated their vendor base, streamlined the procurement process, and reduced administrative overhead.
So they're not just saving money on the products themselves, but on the whole process of getting those products into their parks.
Right. It's efficiency all around.
Smart move.
Yeah.
But let's not forget about the other big area of cost savings overhead.
Yes. Those essential but often overlooked expenses that just come with running any business.
Right. Like rent, utilities, administrative staff, all that behind the scenes stuff.
Exactly. And by merging, they've been able to cut out a lot of those duplicate overhead expenses. Maybe they closed some regional offices or consolidated some departments.
Yeah, it's all about finding ways to be more efficient without sacrificing quality or guest satisfaction.
And that's really the key here. They're not just cutting costs to cut costs. They're doing it strategically, reinvesting those savings back into the business to fuel future growth. They even said they expect to save another $70 million in 2025.
Wow. So the synergy train just keeps rolling.
It does.
But I have to ask, how are they able to achieve all these cost savings while simultaneously improving guest satisfaction? Isn't that usually a trade-off?
It's a tough balance. It really is. And honestly, it's pretty remarkable that they're pulling it off. I think it speaks to their focus on operational excellence. They're not just slashing budgets, they're optimizing processes, investing in technology, finding smarter ways to do things.
This is not just about cutting, it's about being smarter with how they do things.
Exactly. They're actually seeing guest satisfaction scores go up since the merger.
That's wild. It tells me that they're really laser focused on delivering a top-notch guest experience, even while they're tightening their belts behind the scenes.
They're having their cake and eating it too.
Exactly. But let's not forget about their growth strategy. These cost savings are just one piece of the puzzle.
Right. They're also pumping money back into their parks, adding those new rides, creating unique experiences to drive attendance and revenue growth.
Yeah, remember that $475 to $500 million capital expenditure plan we were talking about?
Oh, yeah.
That's some serious investment. They're not just trying to keep up with the competition. They're aiming to be the leader.
Absolutely.
We're talking record-breaking roller coasters, immersive themed areas, state-of-the-art technology. It's all about creating those unforgettable experiences that people will talk about.
And it's not just for the adrenaline junkies. They're investing in family-friendly attractions too, making sure there's something for everyone.
Yeah, they want those families coming back year after year.
Of course, it's all about appealing to a broad audience.
Makes sense. Speaking of long-term thinking, let's touch on their Project Accelerate initiative. This is where they're reviewing their entire portfolio to identify any assets that don't really fit their core strategy and that they might consider selling off.
Yeah, it's a smart move. By divesting those underperforming or non-strategic assets, they free up more capital to invest in their top-performing parks and fuel further growth.
So it's like they're pruning the tree to make the remaining branches stronger.
Exactly.
I like that. And they've already found a buyer for some land near their Richmond, Virginia park, which shows that they're serious about this initiative.
Yeah, they're not messing around.
It's all about making those tough choices, optimizing their portfolio for maximum returns.
It's a classic move, especially after a big merger. Companies often find that they have assets that no longer align with their core business or aren't contributing enough to the bottom line.
So it's like cleaning out your closet.
Exactly. You get rid of the stuff you don't wear anymore, and it frees up space for the things you love.
I love that analogy.
Yeah.
So Cedar Fair's portfolio is about to look a lot sharper and more focused.
Yeah.
But enough about optimization and efficiency. Are you ready for another round of this is not financial advice? All right, let's fire up those imaginations. Remember, folks, we're just having some fun here, brainstorming some out there ideas.
Of course.
What if Cedar Fair created a whole new category of entertainment experience? Something that combines the thrill of their rides with something completely unexpected. Like, what if they partnered with a major streaming service to create these immersive, interactive experiences based on popular shows?
Okay, now we're talking. Imagine like a Stranger Things themed haunted house or a Bridgerton inspired ball, all set within the immersive environment of a Cedar Fair park.
Yeah, it could be a whole new level of entertainment, blurring the lines between theme park and interactive storytelling.
And think about the possibilities, exclusive content behind the scenes, access meet and greets with the stars.
Oh yeah, the merchandising potential would be through the roof.
Absolutely.
So listeners, what do you think? Is this the future of entertainment, or have we gone completely off the rails?
Let us know. We're curious to hear your thoughts.
We'll be back in a moment with the final part of our deep dive, where we'll wrap up our Cedar Fair analysis and leave you with some key takeaways. Don't go anywhere. Welcome back to Talk Tickers, everyone. We've been on this deep dive into Cedar Fair's earnings call and
yeah, lots to unpack.
exploring all sorts of wild ideas.
It has been quite the journey.
Yeah, but before we officially wrap up this episode, I want to take a step back and kind of like connect the dots. What were the biggest takeaways for you from all this?
Well, I think what really stands out to me is Cedar Fair's like dual focus on efficiency and growth. You know, they're not just cutting costs for the sake of it.
Yeah.
They're reinvesting those savings into strategic initiatives that are going to drive value in the long run.
It's like they're playing chess, thinking several moves ahead.
Exactly.
They're optimizing their portfolio, investing in new attractions, and constantly looking for ways to make that guest experience even better.
And they're not afraid to make big, bold moves either, like that Project Accelerate initiative to sell off some of those assets that aren't really core to their business.
Right. It shows that they're willing to shake things up to deliver those returns for their shareholders.
Absolutely.
It's a good reminder that the theme park industry is always changing. It's not just about building those bigger, faster roller coasters.
It's about creating those immersive experiences.
Right. It's got to resonate with consumers today.
And Cedar Fair seems to get that they're investing in technology, exploring new partnerships, really thinking outside the box to stay ahead of the game.
Yeah, they're definitely not resting on their laurels.
No.
And with that Six Flags merger now fully integrated,
Yeah.
they've got the scale and the resources to push those boundaries even further.
I agree. They're a real powerhouse in the entertainment world, and I'm excited to see what they come up with next.
Me too. And who knows, maybe we'll actually see that Thrillco spinoff become a reality.
Oh, wouldn't that be something?
It would be a wild ride, that's for sure.
Anything's possible, right?
Anything's possible. But for now, Cedar Fair seems to be on a really solid path. And their latest earnings call gives us plenty to be optimistic about.
I'd say so.
So there you have it, folks. Our deep dive into Cedar Fair's Q4 2024 earnings call. We hope you found it insightful, entertaining, and maybe even got those wheels turning a bit.
As always, remember to do your own research before making any investment decisions.
Absolutely.
The market can be unpredictable, and a little bit of knowledge goes a long way.
Until next time,
Stay
stay curious, stay informed, and keep those ticker tapes rolling.